Welcome to Talk Tickers. You know, in a retail environment this tough, it's pretty rare to see a company just knock it out of the park. But that's exactly what seems to have happened with the Buckle, ticker BKE. Today, we're going to break down their really impressive second quarter results and figure out what's driving this thing higher.
So let's get right to it. The headline number that really turned heads. Buckle came in with an 89-cent GAAP EPS, a solid 6-cent beat over what the analysts were expecting. Right out of the gate, that's a really strong signal.
And here's the thing. It wasn't just about that one number. This wasn't a fluke. When you look under the hood, this was a story of outperformance pretty much everywhere you look. The whole company was just firing on all cylinders.
I mean, just take a look at this table. The numbers really speak for themselves. Revenue? More than $13 million ahead of what Wall Street thought, up over 8% from last year. And how'd they do it? Well, comp sales were up a really healthy 7.3%. But the real showstopper? E-commerce sales absolutely exploded, jumping almost 18%. That is some serious online momentum.
Okay, so the numbers look great, but the big question is how? What's the secret sauce here? Well, it turns out this wasn't just luck. It was all about smart, focused execution in some very specific and very profitable parts of their business. And here's where it gets really interesting. The women's and kids departments were on an absolute tear. Women's sales jumped a massive 18.5%, driven by a huge surge in denim. And the kids section? Get this, it grew 23%. Just an incredible summer for them. And hey, even the men's business, their biggest segment, got back to growth.
Now, another huge piece of the puzzle, and this is super important for their profitability, is their private label business. We're talking about their own in-house brands. They now make up almost 44% of sales. And this is the 10th straight quarter that number has gone up. Why does that matter so much? Because those private label brands have way better margins. More of that money drops straight to the bottom line.
This next part really shows their pricing power, and it's a bit of a balancing act. So you can see here that units per transaction, or UPT, was actually down a tiny bit. People bought slightly fewer items each time they shopped. But, and this is the key part, the average unit retail, the price of each item, went up by 3%. So what's the net result? The average transaction value still climbed 1.5%. Bottom line, they're successfully selling more premium stuff, and it's working.
All right, so that's the story from the numbers. Now, let's shift gears and listen to what management had to say on the earnings call. During the Q&A, they tackled two of the biggest questions that I know were on every investor's mind: tariffs and expenses.
So first question up was about tariffs. You know, this is a huge deal for pretty much any retailer. It can crush your cost of goods and really squeeze your profits if you're not careful. And CEO Dennis Nelson didn't dodge the question at all. He basically said, yeah, we're seeing some costs go up. Low to mid-single digits on average, a little higher on some brands. But the really important takeaway here is that he framed it as totally manageable. It hasn't really forced them to jack up their prices for customers yet, which tells you they've got a good handle on it.
Okay, next up, an analyst wanted to know about their expenses. Specifically, how they managed to improve their SG&A, that's basically their operating costs, by 80 basis points. I mean, growing sales is great, but getting more efficient at the same time, that's what every retailer dreams of. And the answer was pretty straightforward. They got what's called leverage, because they were lapping some big, one-time investments they made in their website and digital stuff last year. Think of it this way. They had a huge expense in Q2 of last year that they didn't have this year. So with sales going up and that big cost gone, their expenses look way better as a percentage of revenue. And the best part? They said they expect that same benefit to help them out in Q3 too.
So let's recap. We've got a big earnings beat, growing margins, and management sounding pretty confident. So how did the market take all this good news? How did the stock actually perform? Well, the stock popped 2.6% on earnings day, which is nice, but honestly, that's not even the real story. Take a look at this comparison. Buckle hasn't just been a one-day wonder. It has been absolutely crushing the broader retail sector, not just for the last month, but over the last 3 months and even over the entire past year. This is a pattern of sustained outperformance. Okay, so that brings us to the big finish. Let's put all the pieces together, look ahead, and land on our final rating for the stock. So, when we look forward, what's the bull case? It's pretty simple, really. The momentum in their high-margin private brands and their killer denim business just keeps rolling. On the flip side, what's the bear case? Well, you've got to watch that units per transaction number. If that starts to slide more, it could be a sign that customers are starting to push back on prices.
But honestly, when you weigh everything, their smart strategy, their brand power, we feel the bull case just has more weight to it right now.
So based on a really strong quarter and what looks like a very clear path forward, we're giving Buckle an outperform rating.
And just a reminder, as always, this is not financial advice.